What is up, guys? Mike Wang here, back with another cryptocurrency video. It's been a while. There have been some changes in the market. So let's get into today's video where I dissect the chart and explain what's going on with Bitcoin, whether it's a great buy opportunity or whether you should sell your bags and just run away. So first of all, I want to discuss the last two posts that I made on TradingView, which you can check out on my profile, to explain the overall market structure and why I am still bullish. Again, just to keep going back to the symmetry analysis that I posted here, and to explain the basic concept of it, this is how it works. When we see a breakout of the price from a certain range and it makes an impulse move up to a certain point, we label that as A, and we assume that A is going to make another impulse move to the same degree up as demonstrated here. So you can see how the impulse of A starts from the breakout point of the accumulation range, marking a local top here. And while it does correct, it eventually moves up to the point where it goes and makes another degree of the same move up to 64K. And the same thing applies to downtrends as demonstrated by this move labeled B. And the same thing again here as well for label C. We see how Bitcoin is ranging in an accumulation zone. It breaks out, and then from the point of the breakout, it makes an impulse move that can be labeled as C. And to that same degree, it makes a new top at 69K. So using this logic, right, since essentially we're trading in a range between 30K and 60K, or 70K more so, we could label this downtrend, this impulse move down, as D, and we could assume that we're going to see further downtrend to the same degree, which would mark the end of the short-term downtrend near 37.8K, which also, interestingly, aligns with the 0.786 Fibonacci retracement support marked by this green zone over here. So if we play this and look at how it's playing out nicely. We broke down the 0.618 support over here. We failed to break out of it. As you can see, we've tested it, but we failed to break out of it. And I think that 37.8K or 38K is still a very, very probable scenario. We could see another lower low to sweep those support levels and tap liquidity before we can see another bounce back up again. So that was my explanation of the current range that we're seeing. So how exactly should we interpret this trading range? One of the ways we can do this, and by the way, I've explained another way to interpret this in my newsletter, so if you haven't yet, make sure to check that out. But one way to interpret this is to look at this trading range over here as a running flat. So if you don't know what a running flat is, it's basically a corrective pattern that consists of wave A, B, and C, where C doesn't end as low as wave A because of the buy pressure that is existent in the market. So what we can see here, counting Elliott waves, is that we are probably seeing or possibly seeing the formation of a running flat before we make another final impulse move of wave 5. Of course, we don't know how this wave 5 is going to play out. Ideally, I would like to see it play out this way so that we reach 230K regions, possibly, potentially, maybe not. But this is just one way of looking at the market. I don't know exactly how wave 5 is going to play out, but what's more important to understand is that this entire range over here, this trading range that we're referring to, this trading range that we've been stuck for the past year, should be interpreted as a wave 4, not the end of the cycle. And I'll go into more detail explaining why this isn't the end of the cycle looking at the daily chart. So let's break down the daily chart to see what we are looking at. And this is the chart. If you guys have been following me for a while, you'll understand that this is the chart that I've been referring to since last year. I think it was probably September that I started using this chart and referencing it because we're stuck in this trading range. Look at this. We've been making moves, predictable moves within this entire trading range for the past year. That's not cool. Well, it's easier to interpret because we have support and resistance zones that we can clearly identify. But obviously, everyone's happier when it only goes up, right? So now let's break down the daily chart to see what we are looking at. I first of all marked all the higher highs, higher lows, and the lower highs and lower lows of the chart. So if we look over here, let me just change the settings. So if we look over here, higher high, higher low, higher high, higher low, higher high, higher low, higher high, the formation of a lower low, right? And the beginning of a downtrend. So we see a lower high over here, lower low, lower high, lower low, lower high, yada, 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 so on and so forth, right? So that's what we're essentially seeing here. And what's important to look at is this. We have basically, first of all, broken down the ascending trend line support marked by this dotted red line over here. Everyone initially expected, including myself, to be honest, for us to bounce from this range before we move up somewhere in a trajectory like that, but that was not the case, right? And immediately as we broke down, this move up over here was essentially a formation of a lower high, indicating that the downtrend was not over. And in fact, this should have been interpreted as a retest, a pullback to test the now support turned resistance. So with that in mind, it's also important to understand that we are currently in a short-term downtrend. And I'm pretty sure that's easy for us to see, right? So higher high over here, lower low, lower high, lower low, lower high, lower low. And everyone got euphoric here as they bounced from 39K up to 44K. But that was essentially just a formation of a lower high, which is why I said don't get too euphoric on my Twitter page, right? And even if we do see another impulse move, a slight impulse move that doesn't break this downtrend, that would still be interpreted as the formation of a lower high. And essentially, that wouldn't mean anything to us because we wouldn't know if the downtrend is over. Now, I've marked the significant support and resistance lines. One of the most important support lines that I'm looking at here is the 40.7K region, for one, and then we have the 38K, or more specifically speaking, the 37.5 to 37.8K levels. And what I am assuming as a possible scenario is for us to tap this region, possibly accumulate, or possibly just rally back up almost instantly. But for us to tap liquidity at these regions around 38K, forming a final lower low before we can actually break out of this descending trend line resistance, right? So if you take a look at that, the descending trend line resistance is marked by the dotted black lines, and we haven't been able to break through that yet. So if you take a look at it, this is how important this trend line resistance is. Over here, we failed to break above it. And look at the degree of the bearish candles that formed afterwards. The same applies here. We were ranging sideways. We tested this trend line, failed to break above it, and look at the bearish engulfing candle that formed afterwards. So if we test this again by ranging sideways for a while, for possibly the next 4 or 5 days, and we fail to break above it, the chances are we might see a huge bearish engulfing candle tapping that liquidity that I have been talking about at the support zone of 38K. Of course, we could just break out of this range, in which that case, that would still be good because we would at least know, we would at least have confirmation that the short-term downtrend is possibly over, right? But my anticipation of how this is going to play out is basically there's a higher chance of us still tapping that 38K support. And honestly, to be honest, from a broader perspective, from a macro perspective, anywhere from 40.7K down to 37.8K to 37.5K is a strong buy opportunity for me, at least. This is not financial advice, but personally, I have my eyes on this region, and I would be very, very interested in placing huge buy orders in those region. Now, if you guys have And if you guys have been following me, you guys will remember that I had strong feelings of bullishness. Well, not feelings. Well, I knew that it was bullish, and there were bullish confirmations. The sentiment was absolute trash back in July and August when Bitcoin was tapping 28.5K and 30K. And this was a region that suggested a huge buy opportunity for me because I knew that this wasn't the end of the market cycle. And I get the same feeling here as I did back in July and August of last year. It's giving me the same vibes essentially. Now I want to get into explaining why I think this is not a market top. First of all, the top of a market structure doesn't normally look like this. What we see and what we have seen historically for Bitcoin at the end of its market top, at the end of its market rally, was a blow off top where we see a sharp drop and a dead cat bounce that is lower than its previous all-time high, and we slowly bleed out from that range. And then as we trade sideways and as people think that everything is over, that's when it drops again, and that's where we accumulate once again. And this process takes about 2 years, or at least it took about 2 years in the past cycles. And another thing I want to talk about blow-off top structures is normally when we see a blow-off top where we form an all-time high, drop sharply, and then see another lower high that forms and it drops sharply. The volume on this thing, this is how it looks. The volume continues to increase as it reaches Bitcoin's all-time high, and then afterwards it starts decreasing. That's how the volume action looks like for every market top in history for Bitcoin. But if we look at the volume action on this thing, this is insane. Bitcoin formed a new all-time high in November of last year at 69K, and the volume has been decreasing ever since. There hasn't been any meaningful volume breakout suggesting that smart money has been selling the top, which is why I am convinced that this is not the market top. Another reason this isn't the market top is because normally market tops, if they are tops that aren't blow off top patterns, have a round shape. They have a round ceiling, which is essentially a triple top, right? And a triple top is essentially a variation of the head and shoulders pattern that we are very commonly aware of. So let's assume that this is the market top. Let's assume that Bitcoin won't reach 80K this season, right? It's going to take at least another 4 years for Bitcoin to reach new all-time highs past the current all-time high of 69K. What I would expect personally is a movement that resembles a head and shoulders pattern like that, or possibly a triple top going a little higher than what we see over here. But basically a variation of the head and shoulders pattern that would confirm the end of the Bitcoin cycle and a break down to 20K levels. But this is highly improbable. And first of all, while it is highly improbable, that doesn't mean that we can't capitalize on current market situations. Look, assume that this actually is the end of the market, which I don't believe it is, but assume that it is, right? And if it does tap liquidity at 38K, if it moves up to 65K, let's say, right, before it forms the end of the cycle, doesn't that mean you can still capitalize on this move over here? That's still a 40 to 50% move you can capitalize on. So regardless of how you see it, to me, this range over here offers a huge opportunity for me, which is why I keep saying I see huge buy opportunities in that region. And now just to explain how I see the market playing out, I want to take a look at the open interest chart of Bitcoin. And for those of you who don't know, basically open interest, it just means the amount of leveraged positions that are open on Binance in this case, right? And basically, I think as smart money closes their short positions down near 38K, right, which is where I have my eyes on, we'll see open interest drop significantly here as well, as smart money who has been holding short positions close their short positions, cover their short positions, and take profits. We'll see a drop in open interest rate as well. And we'll also possibly see a sharp bounce that breaks the downtrend that I've been talking about, right? And as Bitcoin ranges sideways for a while, that is when we could potentially see an alt season before Bitcoin makes another impulse move higher. Now, could this not happen at all? Yes. Could this happen perfectly as I expected to? Yes. But this is all just one of many probabilities. This is one of many probable scenarios that I have to keep in mind in order to see how I can position myself in a market that is so volatile and so rapidly changing almost every day, right? So that's just something I have in mind. This could obviously easily change, and you will know when it changes because I will be talking about my changes in perspective and my changes in the strategy and how you should position yourself in the market through my newsletter, which you can subscribe to via my website for just $25 a month. And that's $25 if you just do it for a month. If you subscribe for a longer time period, obviously, if you could go with the annual plan, that would mean $20 a month. And looking at everything my newsletter offers and the quality of the research, this is an absolute steal. I mean, look at what these institutions are offering. And most of the time, it's not even useful or they're not even right. For only $20 a month or $25 a month, you could get basically free alpha. So make sure to check that out. Link is in the description to this video. Now, going back to Bitcoin's chart, I just want to make sure that I'm clear that for 2022, I'm extremely bullish on Bitcoin. And I know it's hard to say this, especially in market conditions like these, where a lot of people have left or are considering leaving. And while the market is bearish, there are not that many people talking about bullish perspectives. People were bullish at 50K. And I'll be honest, I was one of those where I was bullish because we broke through the all-time high levels. And I thought it would be problematic if we bounced back to, if we dropped back into this trading range below previous all-time highs, because that would indicate that this formation of a new all-time high was essentially meaningless, right? So while I did switch my stance and say that we could see short-term bear moves, the market sentiment completely crashed. Everyone is talking about how the Fed is going to raise their rates. Now that's going to hit Bitcoin so hard and we're going to see sub 20K levels very soon. I do not think that is the case. I don't want to go too in-depth about that in this video. But if you guys are interested, make sure to definitely subscribe to my newsletter because I will be talking about my macro perspective and how the macroeconomic factors can affect Bitcoin in a positive way as well. So if you guys want to know more about that, make sure to check my website out. So that is it for today, guys. Just a few takeaway points from my video is that, first of all, we are within a trading range that is completely normal, even if we drop down to 38K and possibly even 30K, as long as we don't break 28.5K. And from a bigger macro perspective, there is a very, very, very small chance that the market cycle is actually over. Whether we'll see an impulse move to this degree is questionable, but I can assure you that there is a higher probability that the bullish rally remains intact than the probability that the market cycle is over and that we have already seen the top at 69K and our next destination is 20K. I see a buy opportunity between 40.7K down to 37.5K, and I think I could possibly be greatly rewarded for setting up some heavy buy orders here, possibly sometime around the summer. And instead of just getting too high on hopium, I would obviously like to see some sort of confirmation. For instance, the primary sort of confirmation that I would be looking for in this particular chart would be a breakout from the descending resistance that we are looking at. Of course, that wouldn't be enough if we see weak momentum where we range sideways like that, but I do not think that is going to be the case, especially with the number of open interests we were at historical highs. It's slowly starting to decrease, but I think we could definitely see a huge move upwards, and possibly a huge bearish engulfing candle as we touch the resistance line before we can bounce back up again. That is it for today, guys. Thank you so much for watching. If you stuck around until the end of this video and found it to be helpful, please do me a favor and smash that like button, subscribe for more quality content, and I'll see you guys in the next video. Take care.